let's go to some live examples here. The first one I want to share is the one with the forex. So I will just open a chart. This is the Euro USD weekly chart. I want to show you also a long-term projection here. So let's start with the weekly chart. I will just go back a little bit that we can see some examples here. Just set up the chart, just that we see a clean chart here. Okay, so what we have here is the Euro US dollar weekly chart. Actual chart. I just got back into the past. We are in the middle of 2009 here in the running uptrend, and now I will apply the cycles tool. So this is just, we just open the tool set and apply the dynamic cycle explorer, put it to the chart, just set one reference point that the data has some pointer analysis, and what pops up is what you have seen in my explanation. This is the dominant cycle, which has been detected completely automatically by this engine here. So there's no tricks behind in how to set up the cycle. This will be done by the engine automatically. So now you can see the most dominant cycle on the chart. We can have just a short review. If you draw from the top to the low, you can see here that we have the tops and bottoms. Okay, this is skipped, but are in alignment with the red line also. What is now interesting, or the point of interest here, is for sure the next projection, with the top projection here at the end of 2009. So, and what this means for trading, if we only look at this indicator, that we would expect a major high somewhere in the last half of 2009. So now if we progress bar by bar, what I will do now, you will see an updated projection. You should follow the blue dot here on the chart. So the blue dot moves on as new data comes in. This is weekly data. So you see slightly that the green dotted line changes just slightly, a little bit. So this is the meaning of dynamic component here. So if it stays the same, the cycle is still valid regarding the length settings and the phase settings here. And we know that following this cycle that we are not at the top already here, so we have to move a little bit forward. I will just go forward bar by bar here by showing this example. You'll see again that slightly the dynamic cycle is switching. The blue dot is now progressing to the top projection here, and if we move forward, I think now we can clearly see that the cycle arrived at this top projection here. So now we are at the top projection of the cycle. The Euro US dollar just reversed this week, so from the cycles perspective, from the dynamic cycles perspective, this is the top we are seeing now on the market on. And we move forward from the long-term perspective here. Just the next low is projected to come in somewhere in the middle of 2010 or second half of 2010. So we go ahead bar by bar. You see, okay, the top was projected 2 or 3 weeks early, but I think from the long-term projection this doesn't matter. So now cycle is moving down and price is moving down from this projection here. Again, you can slightly see that the green dotted line is just bar by bar, and this is now, I hope you will see the meaning of dynamic cycles. With a static projection, this won't be updated. So for example, here you have the situation that price bounced back here a little bit, but the long-term cycle still shows you that you are just in the middle of the longer downtrend here. So no situation to go along here. So let's just move forward. You see the cycle is mainly still the same from the general length setting, but the projection, the dynamic projection, was adjusted now a little bit to the left. So we would expect the low to come in a little bit earlier than projected at the end of 2009. So as time goes on and new data comes in, we can clearly see that this cycle is moving down here. So we are not fooled by this stop here price of slightly going down. We are now just at the beginning at the projected down window here. So now we are alarmed that during the next week a projected low should show up in the market here. This is what we can see here at this point where the blue dot is here. So now we should have close attention on the for sure on the daily chart to do our fine-tuning here. You can see now we are approaching the point. So now price is moving up for 2 weeks here and exactly at the projected bottom of the chart here. So now the blue dot is exactly arrived at the low of the cycle here. So this would be the situation to close the short and go long again. And you can see the next upturn is projected into the second quarter of 2011 here for this cycle, so which I just marked on the chart. So now if you again go ahead bar by bar on this chart, you see that the cycle is just moving up as price is doing here. You again can see that the projected top is slightly adjusted bar by bar. So this is done by the dynamic component here, of course, and I will just move a little bit fast forward. You can see here again a nice situation. Price pushed down here in the middle of the cycle, but we are warned, and from the long-term perspective we know that the upward push is not ended yet. So it's not the right time to go short here. We would expect that the market would still go up after the cycle projection here. So let's progress and move forward in time. And exactly what the long-term cycle projection showed us, price was again now moving up, and we are close in front of our projected top window here. And again, you see from the green dotted cycle projection that the projected top is just updated and adjusted bar by bar slightly, but the general cycle stays the same. So now we arrived at our top projection here from the dynamic approach as seen by the blue dot here on the chart, and will be the right situation where it's now would expect the downward move until the end of 2011, until the beginning of 2012 here. So now let's progress and move forward, and you can see that price is just moving down into the end of 2011. So just to highlight the swings which have been projected by the dynamic cycle toolkit here. So this, you can see that these swings exactly have been forecasted by the dynamic cycle explorer here from the long-term perspective. So this is the long-term cycle, and you can see that the long-term cycle was just detected automatically. I just used the standard settings here, so nothing special here. I now want to switch to a more shorter time frame here. So for sure we don't trade weekly charts, but this is the general cycles perspective. You also have to set your daily or even shorter time frame into the perspective of the higher time frame. So this is the reason why I started here with weekly charts. So, but now let's move on. Let's see what would have been the situation at end of December or the beginning of this year. So here, this is the situation at December 16, 2011, which is labeled here on the chart, and you can see that from the weekly perspective, we are approaching the projected low here. So this is the point where we are alarmed to expect the next low coming in during the next week. So from mid of December, we are waiting for a major low in the euro-US dollar chart. So, and this would be the situation when you start to switch to daily charts. So this is a situation on which chart expecting our low, but to fine-tune the trades, let's move to the next time frame, which is the daily one. So what I will do now is I will switch to the daily chart. We'll just clean up the chart. Oops, just a moment. Delete all what's on here. Just start with a clean chart here. Let's go back to December 16th on the daily chart also, that we can review this. This is example for sure. So this is the daily chart, which will show up next. Let's just wait a moment until this shows up, and I will just align this. Okay, let's start with the cycles. I just have to set up this chart now. I will have the Dynamic Explorer on the daily chart, where we'll use the January low here as a starting point. And yeah, now let's just move on. I'm just wondering if if you can see the daily chart now. I think now it's online. I'm not sure if it's wait. Okay, now you should see the daily chart on your screens with the Dynamic Cycle Explorer attached. Okay, now you should see it in full detail. Okay, what you see here, we have December 16th here on the daily chart, and the blue dot exactly shows us that we are on December 16th, and what here was, so this is not the same cycle we have seen on the weekly chart. This is for sure just a shorter cycle. I will just highlight this cycle a little bit regarding price behavior. So the low from this cycle is just here. The high is just the high in May. The low here that you can see this cycle detected correctly the main swings in the market here. And this projection gave us the information that from the daily perspective we have also expected the next low to come in for the end of 2011 and the beginning of 2012. So if we move on the daily chart, for sure we know that we are not at the low point yet. So the low is projected. If you look closely, I can just zoom in a little bit. If you look closely here, the low is expected in the beginning of January or the mid of January. So this is the point in time where would I expect the low to come in. So to mark it here with the day on the chart, the correct label is January 6th for the theoretical cycle to follow low. So we are alarmed since mid of December for sure, but if we switch to the daily cycle, we would know that the daily cycle is just progressing downward and the expected low is to come in the beginning of January. So I'm just moving forward by here, and you can see that price move down into the beginning of January, and the projected low is still on for February. So now you can see the situation, what you see here on the chart, that we have here January the 8th, where the projected low point was. For sure, you should now set up different indicators where you will see divergences and all this stuff. And this would be the situation from the daily point of view that you would expect the low. And what is interesting now that you have a cycles within cycles approach here. You knew from the weekly chart that the major low was expected to come in at the end of December 2000. You switched to the daily chart, which gave you the projection that the expected low was shown up on the beginning of January, or as seen here on the 8th of January. So this is what I call the dynamic cycles within cycles approach. So this is for sure the old approach for using cycles within cycles, but with a new engine and the new idea of using dynamic cycles here in the market here. So you can time your trades for the long-term cycles on the weekly charts, and if you have an alignment between major dominant cycles on the weekly charts and the daily charts, which is the situation exactly here on the 8th of January, this is the situation where you set up your trades. If we enter training mode here, as I explained to you, after this low was detected in the beginning of January, for sure, you know that markets just moved up from this price information. So what you see here on the chart is the updates of the price data for just today. And this gives you the information that this projected low was exactly on track for a valid low projection at the end of 2011. We just have to wait until your window updates this projection here. So yeah, this was the example just using the Euro-US dollar chart. Again, now you should see the nice upswing here. If you review the actual situation where the price is, I think I don't have to comment the situation. You will have a nice goodie that you also have the actual market analysis from the point of view. And we are an interesting point at the Euro-US dollar chart also